Hey everyone, good morning or good afternoon, wherever you are. So what I'm going to do today now, I'm just going to go over the setups that took place this week from the 8th of May. It was a pretty nice week, a very, very profitable week. There was so many great opportunities to have taken advantage of. So what I'm going to do is I'm just going to start from Monday the 8th. I'm going to work my way from there. So on Monday, we can see that price had already delivered on 2 sessions of rise, but of course, there's also this intermediate bullish session, which could also count as a 3rd session of rise. But within the context of the framework, we could anticipate, because price is so close to the next drawn major liquidity, which is the weekly buy side, we could anticipate a move towards the weekly, daily, and the 4-hour buy side target. So next drawn on liquidity was initially this high, and the daily sell side was this imbalance down here. So that was the next draw on daily. All right, so I'm just going to get rid of this. Now, if we go down to the 4-hour time frame, we can see that. So again, just a forward play up until the 1 a.m. candle. The next draw on sell side liquidity is the swing low down here. And the next draw on buy side liquidity is essentially the same swing high as our daily buy side target. So we have very defined levels in terms of the 4-hour buy side and sell side target. In terms of where we are within a trend, right, we can see that obviously from this initial low, we have this initial expansion, market contracted, secondary expansion, market contracted, and give that 3rd expansion to the upside. So at this moment in time, price is pretty much accumulating within this level 3 expansion. So what I'm anticipating from this area is some sort of a bearish reversal. Now, going into the 1-hour time frame again, so just forward play that to just before the open of the European session. We can see that price obviously is delivered on this initial expansion, the market contracted, secondary expansion, the market contracted, 3rd expansion, accumulation, and do see this as a bit of a reversal, and then market started to trend again. We have the 1st expansion, market contracted. We have then a secondary expansion. The market obviously accumulated, contracted, and has now delivered on that 3rd expansion. So again, on the 1 hour, we are within that 3rd expansion. So anticipating some sort of a bearish reversal. So when we take a look at the 15 minutes time frame, what can we see? Well, just before the open of the London session, we can see that the predefined range is from this initial low to this initial high. So this is our Asian range. So before the London open, price had already given us a trap above the high of the range in European Open, and then London Open price gave us a bearish break below the low of the range. So what kind of setup can we anticipate? Well, very simple. We have here our bearish order block, and bearing in mind that on Monday this week it was a bank holiday, because of course there was the coronation that took place over the weekend. So it was a bank holiday Monday, but still the market is usually active on bank holidays. That's why I personally do not take bank holidays off. I still trade on bank holidays as long as an opportunity presents itself. So this is our bearish order block. Bearish order block. So what I'm anticipating is one of 2 things. Number one, I'm anticipating for price to either A, trade, give us a BRC from the bearish order block to the H1 sell side and H4 sell side, or B, because price has already taken out H1 buy side, what could also happen is a potential BRR, where price could retest the bearish order block but break structure on the 5 minutes time frame, and then we could anticipate a bullish continuation towards the weekly high, because again, remember, price is so close to the weekly, daily H4 buy side as well as the monthly buy side, there is a likelihood the price could trade to these levels. So if we then take a look on when price trades into the order block, because we can only make a decision after price has interacted with the order block, right? So now the question is, what can we anticipate? Well, if we go to the 5 minutes time frame, we can see that price has given us a break of market structure on the 5 minutes time frame, right there. And this is a BMS. Now, what I usually like to do in my head, and I know I don't always talk about this, is that I usually like to count the expansions on the 5 minutes time frame, because usually if price gives 3 different expansions to the order block, then it could be a sign that price could give a BRC back down to the low of the range. But then if price gives 2 expansion to the bearish order block, then price could contract, take out a short-term low, and then we could then give a third expansion above the high of the range. So considering that we're already in London Open and price hasn't yet retested the order block, we can anticipate price to give a potential 5 minutes break retest reversal. So price has given us 2 expansions to the order block. So at this point, we have 2 areas of interest. The first area of interest is going to be our last down close candle on the 5 minutes time frame. So 1 second. So this is where it is. This is our 5 minutes bullish order block. Okay. And of course, the second area of interest is to identify a potential 1 minute setup short. Now, this is usually how I trade these scenarios, because the most optimal scenario will present itself in the most obvious way. And this is how it does. So within this area, price obviously traded and rejected given a secondary break of market structure. Now, if price leaves this area unmitigated and trades into our bullish order block, then it usually is a sign that price is given a retest of the order block and will continue to the upside. But if price trades into this order block, this imbalance, and continues to the downside, then it's likely price might be seeking further sell side targets. Now, the second way that I usually would identify if a break retest continuation is optimal is also based on the potential R to R. So if, for example, I were to enter a short position in the imbalance and position my stop 5 pips above the high, and my first profit target is the recent low, a lot of the time with a good BRC scenario, price would give you a 1-2 to the recent low. But in a scenario where price is not going to give you that BRC to the recent low, there is a likelihood that price would give less than a 1-2, and therefore, again, that would also lead to my interest in going long from the order block. So if you can go long, so considering we have an unmitigated area, for me personally, it's pretty obvious that price is going to give a BRR. We have 2 pushes on 5 minutes. Price is now taking out a short-term low. I do believe a bullish continuation is imminent. So therefore, the 2 ways you can trade a bullish continuation, you can either enter from down here, or what I usually like to wait for is for price to break structure on the 1 minute time frame within this general high volume area. So again, price is still within our high volume area. Price is giving us a low, an intermediate high, and now just waiting for that break of market structure, which price is now delivered on. So now that we have a break of market structure, right, 1 second. So now that we have a break of market structure where price, as it has traded above this intermediate high, but it's also traded above this swing high that is responsible for the lowest low. This is a classical break of market structure, because usually if it was going to be a secondary break, then price would have left an imbalance there, which it didn't. So we treat this as a classical break of market structure with a breaker. So therefore, area of interest is to enter at the breaker. Okay, so specifically the midpoint of the breaker, with a stop loss going 5 pips below the recent low. So we're going to be going long from the breaker. Stop loss 5 pips below the recent low. And the first profit target would be, of course, high of the Asian range for a 1-2.5. And the second profit target would be our weekly daily H4 buy side target for a 1-3.9. So price obviously would have triggered the entry opportunity. So let's imagine that you entered as a buy stop order. Price would have triggered the buy stop order, right? And then would have accumulated for a bit before eventually giving us that run, hitting the first profit target at just before the New York session. And then price runs into the second profit target just before the New York Open. So it's a very quick trade. So BR are 5 minutes to the high of the Asian range and the daily H4 buy side target. So again, just two telltale signs that this was a BRR. 5 is that it's a massive unmitigated area when after price retested the order block. And the second is that price doesn't yield a 1 to 5, 1 to 2 R to R if one were to enter from the imbalance with stop 5 pips above the high. So those are two huge indicators that usually tells me that a likely scenario, especially this price has given a break of market structure in 5 minutes, that the likely scenario is a BRR5. And then rather than just entering at the order block, wait for price to trade into the order block, give a break of market structure, and you simply take that 1 minute break of market structure at the 5 minutes bullish order block. So it's a very simple scenario. So that was on Monday. So now let's go into Tuesday. So going into Tuesday, I'm just going to make these visibility only on the lower time frame. We can see the price has obviously now given us that. So we're again anticipating bullishness, but we've seen prices traded into a high volume area, which is the weekly daily buy side target, and then pulled away. So again, there is a likelihood the price is giving us 2 sessions and we could get a 3rd session of rise, but there's also that likelihood of this being 3 sessions of rise. But considering we've had a bearish session and price has taken out a high volume area, we can anticipate price to run for some sort of sell side liquidity on the higher time frame. So bearing in mind that price has now created a new daily imbalance, there's a likelihood the price could trade into the daily imbalance before proceeding to give us a bullish continuation. Now going down to the 4-hour time frame again, so I'm just going to forward play this to just before the European Open. You can see that price has traded into the daily sell side target in Asia. We have a new swing low that forms down here. This is our draw on sell side liquidity, and our draw on buy side liquidity is pretty much this swing high right here. So I'm just going to Control Z this. So the weekly daily H4 buy side is still the same, right? So it's just going to make this a small adjustment just so it's exactly at the high. Okay, so that's the 4-hour draw on buy side liquidity. And if we go to the daily, we can also see that that also coincides with this initial high as well. Okay, so let's take a look now on the 1-hour time frame. So just to forward play this into just before the European Open. Right, so next year on sell side liquidity is the swing low down here. The next year on buy side liquidity is the swing high up here. We go down to the 15 minutes time frame. Now we can see very clearly. So I'm just going to get rid of these. Okay. We can see very clearly the price has given us a 1 second Asian range. So we have the initial high of the range, the initial low of the range. So now what we just need to do is wait to see what happens in terms of how price trades outside of the range. So we can see that price has given us a bullish break, European Open, but London Open, what can we see? We can see very clearly that price has given us a bullish break outside of our Asian range. Okay, so again, we have a bullish order block right here. So this order block is responsible for the break outside of the range. Okay, so now the question is, okay, what can we anticipate in terms of a setup? So going into the London Open, right, we can see that price, so the first is to wait for price to interact with the order block. So we're either going to get a 5 minutes reversal scenario, or we're going to get a 1 minute. So after price obviously trades into the order block, price could potentially give us a BRC back to the high of the range. But I can see that in this initial pullback, price has given us a 5 minutes break of market structure right there. So I'll just label this as such. So we can see a bearish break of market structure. We can see price is now trading into the order block. We can also see the price has created this initial swing and it's given us a secondary low into the bullish order block. So again, just based on various factors, again, what's my AOI? My AOI, considering that this is a strong close below the swing low. If I go to the 1 minute time frame, I can see that there's a breaker in this general area. So this breaker is going to be my AOI, right? In terms of the 5 minutes. But also, I'm also interested in to see if price breaks structure on the 1 minute and mitigate against the area of interest. So again, we'll just take a look and see that price obviously traded into this general area, and it just simply kept on falling. So there isn't really any break of market structure. So there is no confirmation to go long. And then eventually, what does price do? Price trades below the Asian range. So at this point, there is no confusion to be had because we can see very clearly that price is now traded below the Asian range after giving us a break of market structure on the 5 minutes. So therefore, we should now be open-minded enough to see and perceive that price has also now given us a break of market structure on the 15 minutes time frame. So what is now initially a BRR5 is now a BRR15. So this is how one setup can turn into another setup, just based on how price is moving in the London Open and tracking price properly. So we can see that this initial candle that broke structure on a 15 minutes time frame closed back into the range. So now our new area of interest is going to be the last up close candle, which is our 15 minute bearish order block. And this is good because our 15 minutes bearish order block is also in the same area as our 5 minutes breaker. So this is obviously a confluence of events, right? So we have the 5 minutes breaker right here. So let's just delete that. So we have the 5 minutes breaker within the 15 minutes order block. So now we have a new AOI, which is this general area. So for us to have a valid setup, we now simply need to wait for price to trade into our area of interest. Now, the moment price trades into our area of interest, what I simply do is I go to the 1 minute time frame and I'm simply looking for a 1 minute confirmation to go short within this general area. So again, I can see a very strong shift to the downside. I can see that price created this swing low down here. So I can see that this is a break of market structure. So this is how I traded this on Tuesday. So we can see it's a break of market structure. We can see that this low is an intermediate low relative to the highest high. So therefore, what I want to do is wait for price to create an imbalance, which it's done. So now, right, this is a very simple setup because it's a secondary break of market structure. So stop loss would go 5 pips above the high. Now entry would go at the imbalance. And again, you can position your entry anywhere within the imbalance. But of course, the most prudent thing to do would be to enter at the opening of the imbalance. Your first target would be the recent low down here. So that's a 1 to 3 R to R. Now you could aim for both targets at the recent low. Alternatively, what I always like to do is I like to hunt to see if the first thing is, where is the 800 EMA? So it's all the way down here and I can see that, okay, there is like a low down here, which is obviously in proximity of the 800, but I can also see that there's an imbalance right here. So again, I'm not just going to say that, oh, price is going to trade all the way to this low when there's an imbalance and there's a swing low down here. I'm going to look on the 1 hour time frame to see if those two areas confluence with anything. So that's a 1 hour, it's a 4 hour. So I'm just going to go back to the 15. And what I'm going to do is my second target is going to be positioned at the imbalance down here, because again, the R to R is pretty good. So 1 to 4 R to R. So it's not bad. Or you could have also positioned your profit target at the swing low. But either way, this for me is the most reasonable place to have positioned my secondary profit target. So we can see the price traded into the AOI, so which is obviously our imbalance, and then just hung around there for a bit before eventually making a shift to the downside, giving us that first profit target hit at the low of the Asian range, and then eventually trading into this M15 imbalance. And notice how price gave a nice rejection of that imbalance. And I do believe price did trade a little bit lower. Trade a little bit lower, but the imbalance would have been a second best place to have taken your profit, as well as the recent low. So remember, you're always aiming for the next most reasonable draw on liquidity relative to where price currently is. So that was Tuesday. So we can see that Monday was pretty nice, right? So started the week with a break retest reversal on the 5 minutes time frame on Monday, and then on Tuesday we had a break retest reversal on the 15 minutes time frame. So now going into Wednesday. So Wednesday we can see that price on Tuesday gave a contraction candle, traded into this imbalance to the downside. So now my new drawn daily sell side is now going to move down to this imbalance below. Buy side will stay the same. So again, because price is still within this general area of high volume, I am anticipating a potential bullishness back to the high of the range, considering prices taken out weekly, traded into daily. So for me, it's reasonable to anticipate bullishness to the upside. So if we go into the 4-hour time frame, we're now again going to forward play this to just before the European Open. The next drawn buy side liquidity is going to be the swing high up here. And the next drawn sell side liquidity is going to be this swing low down here. Okay. And then if we go down to the 1-hour time frame, we can see very clearly that obviously just before the European Open, again, the next draw on the 1-hour liquidity would be this imbalance, H1BST. And the next draw on sell side on the 1-hour time frame would be the swing low down here. Okay. Now, let's just remove all of this. Let's remove all of this. Okay. Because now what I want to show you guys is how Wednesday played out. Because on Wednesday, bearing in mind we had a core inflation red news event taking place in the open of the New York session. So this would have been something to have taken into account because it would influence how price moves in London. Now, just before the London Open, we have this initial range. Price had already given us a bearish break outside of that range. So therefore, where is our AOI? Our AOI is this bearish order block. Okay. So price London Open trades into our bearish order block and then proceeds to do what? Proceeds to trade into the H4BST. So it essentially purges and breaks above the high of the range. So therefore, what is the most reasonable setup to identify in the London Open? Well, within a context of the fact that price has given us a bearish move to the downside and then proceeded to give us a bullish break to the upside, this structure is a 15 minutes break of market structure. So therefore, I'm going to treat this as a 15 minutes BRR. Now, considering the price has broken structure and traded back into the range, my AOI is going to be the last down close candle, which is my bullish order block. So there's my 5 minutes, 15 minutes bullish order block. So it's very simple. So all I simply now need to do is wait for price to trade into the 15 minutes bullish order block. And then from this area, I'm now interested in going long. So we can see that once price traded into the 15 minutes bullish order block, price gave a bullish break of market structure. right? One second. There we go. So price gave a bullish break of market structure, right? So creating a breaker right there. And now what's our area of interest? Our area of interest is to enter at the breaker, stop going 5 pips below the low. So we're going long opportunity, midpoint of the breaker, stop going 5 pips below the low. And first profit target would be the recent high. That's a 1 to 2. So that meets our minimum criteria. And the second target would be our daily high. That's a 1 to 4, right? So we can see the price trades into the breaker and then eventually rallies, right? So it looks like it's rallying anyway. So this is exactly what happened on Wednesday. You know, every day is going to be like a piece of candy. Some days you need to work for it. So again, price was in profit for quite some time. But now the most important thing is to always pay attention to what price is doing just before a red news event kicks in. Because usually the sentiment will be created before the news event and the news event would act against that sentiment. So again, this has happened before quite a few times where price would give us a solid setup, but then hang around for a bit and then trade to take out a lower major target, such as this H1 sell side target. Now, the two things you can do in these scenarios. The first you can do is call it a day. You've taken a loss, you've had 2 days of wins, 1 day of loss, that's fine. And you just wait until the next day because again, losing is a part of being a profitable trader. The second aspect, you just need to learn to lose properly. But the second thing you can do, and this is what I sometimes do when I see things in advance, and you guys have seen me in action live recently when this similar news event happened last month, where price would trade into that H1 SST, and then I would simply look for a new break of market structure. So I'll look for a new break of market structure. After that new break of market structure, guess what I do? I simply re-enter because price is so close to the red news event. What I'm anticipating is that, again, the bullish bias still stays the same. Price is simply purging out the recent low. Because remember, after a break of market structure, three things can happen. The first that can happen is for price to retest the last downward candle, the breakout, or price could simply take out the recent low. So we can see that the H1 SST was so close to the recent low that for price to take out that low, it makes sense, especially before the red news event, because it's now creating a bearish sentiment before an inflation news event kicks in. So what I do is I would re-enter because again, I'm a very stubborn trader, but when I do see a good opportunity, I do not want to let it go by. With my first target still being the same. Again, all of this is within risk management, by the way. Within good risk management, vitally important. And my second target is the weekly buy side. So again, I sell 1 to 4 to the recent high and a 1 to 7 to the daily. So price triggered in position and just kept on hanging around this general area. Again, that 5 pip stop is crucial. And then watch what happens when the red news event kicks in. A massive bullish run. So price takes out the first profit target in 2 candles. So within the news event, 2 is a single candle from the news event, and then proceeds to give that bullish continuation and trades into our weekly buy side target, but also trades into the monthly imbalance above as well. But the most reasonable next strong liquidity was the weekly anyways. So we can see that the red news event was a catalyst that was essentially used to drive price into a higher time frame target, which is something I say happens quite a lot. So a lot of the time when price is so close to a weekly or a monthly target, a red news will be used as a catalyst to bring in the liquidity that would drive price into that area of liquidity that would allow essentially the market makers to book their profits that they had residing in this area for quite some time. So let's take a look now at Thursday. So Wednesday would have required a re-entry just before the news event to have been able to capitalize on that trade. Now, Thursday, we can see that price has traded into a major draw on liquidity. It is a contraction candle just like the previous day. But now we can anticipate either one of two things, a bullish continuation into this major draw on liquidity, or for price to trade away from that area aggressively. Because again, after they book their profits, price would usually reverse in the opposite direction. Now, the next draw on sell side liquidity on the daily was the swing low down here. And the next draw on buy side liquidity on the daily is obviously going to be our high, because there's a massive imbalance that still remains open. So it's just going to be the recent high where the imbalance still remains open. So this is our liquidity targets on the daily time frame. We'll go down to the 4-hour time frame again, just to forward play this just before the open of the European session. You can see the next draw on buy side is going to be this high, so it's the same as the daily, so I'm just going to delete that. And the next draw on sell side is going to be the swing low down here for the 4-hour time frame. Again, we can see the price is delivered on, so from this low, we are still within that third expansion. We'll take a look at the 1-hour time frame. Again, just to forward play that once just before the red news event, no, just before the European Open. We can see the next draw on liquidity on the 1-hour time frame is going to be our imbalance right there. So again, I'm just going to make this adjustment. So H1BST. And the next draw on liquidity on the 1-hour time frame is going to be the swing low down here. It's the H1SST. So going to the 15 minutes time frame, we can see that price has essentially created another range. So we have ABC. So these 3 points defines our range. You can see there's 2 different red news events to be aware of for today. We had the Bank of England interest rate decision, and we had PPI. Again, these are 2 major market moving news events. Now, just before the London Open, we can see the price has given us an aggressive bearish break outside of the Asian range. So 2 consecutive closes indicates that this is now a bearish order block, because this initial high did not take out this prior high. So therefore, this is going to be our bearish order block. So what we're now anticipating is one of 2 scenarios. Either price trades here, break instruction in 5 minutes, and we take that as a BRR5, or price trades into the order block and we take a continuation to the downside. So price has already taken out H for sell side target. So now the question is, okay, what kind of setup are we going to have today? Well, London Open, price takes out the daily sell side target as well. So you could either do one of 2 things. Now, at this point, you can either call it a day, because price has traded very far away from the daily sell side target. Now, one thing I do not recommend is taking 5 minutes opportunities, because even if there's a 5 minutes break of market structure, there is no guarantee it's going to go back into the order block. So as a fundamental rule, and this is something that I've recently really put a lot of emphasis on, like I didn't do this before, but as a fundamental rule, price must interact with a bearish order block, even in a BRR 5-minute scenario, as a fundamental criteria. So failing to interact with the order block when price is very far away from it, there is simply no setup. We have to wait for price to interact with the bearish order block. So essentially, what happens is price just kept on doing this, it just kept on accumulating for quite some time. So I'm just going to remove this, because on the day I did look for a 5 minutes entry, which I shouldn't have done. Again, because of that criteria that price should interact with the bearish order block. So even though I did look for a 5 minutes opportunity and it did play out, right? It is not a setup that I would advise, because if yes, this is a break of market structure, a secondary break of structure with an imbalance, one could have entered at an imbalance, stop 5 pips below the low and aim for the order block. I do not recommend it. Rather, the best thing to do would be to just sit tight and wait for something like this. So we can see that during the red news events, so BOE interest rate decision, price traded into the bullish order block. Now the question is, do we have an opportunity to trade a continuation as a 5 minutes reversal, or are we looking for a 1-minute position to the downside? Well, we can see that this is where price broke market structure. Remember what I said about the 3 pushes on the 5 minutes time frame. Price is delivered on the 1 expansion, 2nd expansion, and 3rd expansion. So I can see very clearly that just before so if I just play the next candle, we can see that price has delivered 3 pushes into the bearish order block. So at this point, I have no reason to anticipate a continuation of this general cycle. Rather, what I'm anticipating now is a 1 minute break of structure to the downside, and then a potential bearish reversal. So I can see price created this initial high, traded down. This is an intermediate low down here, right? But doesn't break market structure and just keeps on rallying. And the price delivers back into the bearish order block. Okay, again, doesn't really deliver a higher high, so this is a lower high. Okay, and eventually breaks below this, leaving this imbalance. Now, this is where experience and prudence comes in, because of course, not prudence, but experience and just having a bit of understanding of price action. So of course, the classic thing to do in this case will be to take an entry at this imbalance and to position your stop loss 5 pips above the high. Okay, this is one classic way you could have traded this if you were going to trade this in line with the red news. But the best way to have traded this, because if you enter somewhere down here, right, your R to R will be horrible, because remember, you as a minimum from your entry to the recent low should be a 1 to 2. So the next thing to do is, if you enter here, there's no point, it's not valid setup anyways, so there's no point of entering there. So where would be your next best area to enter? Well, there's an imbalance right here. Again, so this is how I do it. I say, okay, if I were to enter at this imbalance, my stop goes 5 pips above the high. Can I get a 1 to 2 to the recent low? If I can't, then there is no setup at this entry point. So where would be the next best area to enter? Well, I can see that there's an imbalance there. I can see there's an imbalance there. I can see that price still has an imbalance that remains open right here. So for me personally, I believe the next best entry would be this imbalance here. Now, price is either going to trade into this imbalance and trigger me in, or it isn't. If it doesn't, then I don't have a setup anyways. But if it does, and it's in profit, then fantastic. So the first drawn profit target would be the recent low. And remember, this is just before the next red news event. So we're just trading between these red news events, but we're trading this as a break retest continuation, because the 5 minutes has already finished this bullish cycle to the order block, and we now have a 1 minute break of market structure to the downside. The second profit target, again, looking at where the 800 EMA is, price is already there on the 15 minutes. 5 minutes 800 EMA is up here. 1 minute 800 EMA is, again, price is there. So if I'm going to go to the 1 hour 800 EMA, I'm just going to see where that is. Let's see, it's all the way down. It's a lot greater than 1 times ADR, so I'm not even going to attempt to take profit there. But what I'm now going to look for is the next draw. Consider, obviously, this is the lowest low down here. The next drawn liquidity on the 1 hour relative to where price currently is this low down here. So that will be my next drawn liquidity. So if my next area to take profit. So first profit target would be the recent low. The second profit target would be the intermediate low on the 1 hour time frame for 124. So again, price would either take me in or it wouldn't. Do not ever chase price. You can see that price pings right into the entry into where this imbalance is. And then again, PPI kicks in, sending price to the upside, triggering us in, and price makes a run, hitting our first and our second profit target. So again, red news events work. A lot of the time, your big profit runs would come from a red news event. It's about being in the right direction. And if you can identify the most optimal setup scenario just before the red news or after the red news event, I can assure you that the majority of the time you will be trading in the right direction. So you don't need to worry about slippage. But there are times when you might get and I even sometimes get my analysis wrong, and therefore which leads to me trading in the wrong direction. and then that could lead to like a slippage or something happens that I haven't anticipated, because that red news event might have caused price to move erratically in the wrong direction to where I'm trading. So this is a very, very good example of how trading in line with red news works, even with this strategy. So let's now go into Friday. So that was Thursday. Now I know the price did continue running a lot greater than where it did, but again, it's not about, you're not trying to catch the whole move. You're trying to catch the most reasonable move, okay? And again, you always look into the next logical area of where price is, because there's no way to know this is going to happen, but at least money has been made, right? As opposed to hoping and keeping your fingers crossed price would run all the way down here and it doesn't, and then you miss out on what could have been a profitable trade. So always aim for the next reasonable target. So daily, we see that price is giving us a massive bearish session after this initial session. So at this point, I'm like, okay, bearish is probably the better direction because price has taken out a major profit target. So it is probably looking to seek more sell side. Next draw on sell side is this daily imbalance down, is this daily swing low down here. And of course, our draw on buy side is still going to be the swing high up here. If we go down to the 4-hour time frame, what can we see? Well, just going to forward play this to just before the open of the European session. Next draw on 4-hour buy side liquidity is going to be our imbalance. This is not my gray box. Right, so this next draw on 4-hour buy side liquidity. And the next draw on the 4-hour sell side liquidity is going to be the swing low down here. We'll go to the 1-hour time frame. Again, so I'm just going to get rid of this because the markers are still there. Forward play this once, we can see the next draw on H1 buy side is the swing high. The next draw on H1 sell side is the swing low down here. So very simple. If we now go to the 15 minutes time frame, what can we see? Well, I can see that just before the open of the session, this is our Asian range. We have the initial low, initial high. Price has given us a bullish break outside of the range. So what's our AOI? Well, our AOI is going to be for what? For price to do what? To retest the order block. This is this order block that is responsible for the break outside of the range. Now, before the London Open, what can we see? Well, before the London Open, I can see that price has retested a bullish order block and traded back above the recent high. So therefore, what is this general scenario? Well, this is a BRR 1 minute. So it's a very simple scenario where we've had in the European Open a retest of the order block, price trades back above the recent high. So this is a BRR 1 minute scenario. So London Open, all we're simply waiting to do is a price to trade to take out the high of the European session. And after taking out the high of the European session, we're waiting for a break of market structure, which price delivers to us. So this is a secondary break of market structure. AOI is going to be your imbalance right here. Again, you can be smart. You can either enter at this imbalance, or you can say, oh, actually, there's an imbalance that remains open right here. I could enter there as well. And there's also, this imbalance up here as well. You could always choose how to take your entries. But again, the most textbook style of entering with a secondary BMS will be this imbalance. So that's what I teach initially. And then obviously, as you gain more experience, you can then refine your entries even more. So we have your stop 5 pips above the high. Because this is a BR 1 minute, we're anticipating a reversal. Sell it at the imbalance, stop 5 pips above the high. First profit target will be where? Will be the recent low for a 122, or the low of the Asian range for a 122. And then my second profit target, again, we have this H for SST below. So that's what I'm going to aim for, H for SST, which is also yesterday's low. So let's take a look and see what happened. Price triggered the entry at the imbalance, right? It hung around there for a bit, came back into an Asian range, and then just kept on obviously moving around. Again, it's about sometimes you have to be patient with your positions and just let it run for as long as it needs to. The price would take you out stop loss, or price would keep you in the position and eventually run to your profit target. So let those scenarios play out as they should. We can see the price took out the recent high, but didn't take out the stop loss. So one should still have been in the trade. And then eventually, just before, again, we had a red news of the Michigan sentiment final reports data release. Price took out TP1 and TP2 just before that release in New York session. So it's a very simple trade. This is a BRR 1 minute scenario. A very, very, very simple setup to have traded. So that was on Friday. Okay, that was Friday's setup. So as you can see, every single day this week presented a setup that would have yielded a profitable position had one done their analysis accurately and entered accurately, because accurate entry is incredibly important and accurate analysis is also incredibly important. And on Tuesday, there was obviously the re-entry opportunity, which if you hadn't taken, of course, it would have resulted in a losing day. But despite that, you would have still ended your week as a profitable week, because the setups that took place every other day was a textbook style setup. So it's a very nice week. I recommend studying some of the setups that took place this week, especially in line with the Red News events. Super excited to see what next week holds. But I'm wishing you all a great weekend ahead, and I hope this session helps you to gain a much better understanding of price action and to elevate your trading skills. All the best, guys.